Good afternoon, everyone, and welcome to the market wrap for Thursday, the 19th of February. And look, today, the Aussie market finally managed to crack a fresh record high after testing those levels a number of times just this year. So look, by the end of the session, the Aussie market was up by 0.9%. At our best levels, we were up by 1.2%, which actually took us to those record levels. But as you can see, we closed at 9,086 points. We've been on a 4-day winning streak as well, which is our longest streak in over a month, and on one of the busiest days of Aussie reporting season, with roughly 50 ASX listed companies handing down those results. Now, in economic news, we got those January jobs numbers, which showed 17,800 jobs created over the month. That was a little under expectations for 20,000 jobs to be created, and all of which were full-time workers. The unemployment rate remained steady at 4.1%, coming in better than expected, as analysts had predicted an uptick to 4.2%. So essentially that demonstrates that the labour market remains healthy, and that saw traders up bets to a 75% chance of a follow-up rate hike in May. Now, it does appear the market shrugged off today's jobs report, but keep in mind next Wednesday we'll get an update on inflation. If it still remains sticky and way above the RBA's target, that could potentially see investors get a bit cautious, given that Michelle Bullock recently said inflation running with a 3 in front of it is unacceptable, and that's the level that we're sitting on at this stage. So the expectation is that the RBA will leave rates on hold next month when they meet in March, but the expectation is that they could potentially lift rates in May at their meeting after that. Of course, plenty of time between now and then for data to feed through and potentially change those expectations or market pricing around those interest rates. Now, looking across the different sectors today, what helped most in lifting the broader market was the lift in resource stocks, which tracked strength in commodity prices. So you can see the materials sector up 1.3%, energy shooting the lights out with a gain of 3.8%, and the financial sector rocketed to an all-time high as well, which was helped by the major banks. We did see NAB and Westpac both hitting record highs today as well. In fact, looking across the different sectors, as you can see, only 3 of them were lower today, so a pretty solid performance overall. Consumer discretionary was weighed by one stock in particular, which was Wesfarmers. I'll get to that just momentarily. You can see real estate was down around 2.5%, and just a small decline for the consumer staples sector. Now, looking at the winners, of course, too many companies to go through with reporting season in full swing, but let's look at just a few of them. We had financial platform company Hub24 topping the winners list after profits surged on record net inflows. Pathology firm Sonic Healthcare lifted today after beating expectations with an 11% jump in profit despite weaker results from its US business. It also reaffirmed its full year guidance. And telco giant Telstra reported a $1.1 billion half year profit. That's up 9% from the same time last year, over 9% in fact, and that's after aggressive cost cutting that saw the company shed more than 2,300 jobs in 6 months. It also boosted its dividend to 10.5 cents per share, up from 9.5 the same time last year. And on top of that, Telstra announced that it's expanding its buyback program from $1 billion to $1.25 billion, of course, on the back of that cost cutting that drove that jump in profits. Now, on the other end of things, the owner of Kmart and Bunnings, which is Wesfarmers, that was a wait after reporting a mixed performance across its brands, with the half-year performance of its key retail units falling short of analyst expectations. It also warned of challenging market conditions. Now, Kmart and Bunnings, which make up about 70% of Wesfarmers' revenue, brought in $17 billion in the 6 months through to December, and that came in below expectations. Buy now, pay later firm Zip slumped by almost 40% at one stage, ending the day down by 34%, despite more than doubling its half-year profit, but it still missed analysts' expectations and also underwhelmed with its full-year guidance, even though it was upgraded. Medibank reported a drop in net profit and said that more Australians are switching funds and downgrading to cheaper private health insurance policies due to cost of living pressures. And jewellery retailer Lovisa fell to a 9-month low after its disappointing results. So it was near the top of the losers list today. Now, the Aussie dollar has picked up, particularly after that jobs report. It's currently buying 70.6 US cents, and it does remain about 5.8% higher since the start of this year. Now, looking ahead to tomorrow, not quite as busy as it was today with reporting season, but still plenty of companies set to hand down their results. We have Inghams, Cube, Helios, Perseus, Mineral Resources, PolyNovo, Latitude, Telix, and a whole bunch of others. So we'll update you on all of that when it comes tomorrow. I hope you had a lovely day, and we'll see you again tomorrow.